Dear subscribers, as you know, we shared many information for you, and we are studying very hard to find current news for you. However, I cannot use this channel for future. Please follow our new channel called as Daily News Report and watch our video to support us. Link in description. Also, you can reach the video we shared on Daily News Report by clicking on the top right button. We highly recommend watching, subscribing, and sharing. We will continue to share some news on this channel, but we take precautions against some situations for future. Thank you for supporting us.
Entrepreneur myself, having run businesses, started businesses, some successful and some not. So I appreciate entrepreneurial zeal and success from afar. And Tommy started his website, ceo.ca, which is just a phenomenal resource for junior mining speculators. There's conversations going on there. There's real-time data that you can get. You can see when insiders are buying or selling. And he really aggregates and brings to you in real time data from all over the web. And it's truly the best website out there for mining stock speculators to go to engage in conversations and access a ton of free data in real time. So with that introduction, Tommy, thank you for coming on to Mining Stock Education. And over the past several months, I've been receiving a lot of emails from newer mining investors, people that are newer to the gold and the gold stock story. So perhaps you could start off sharing, how could some of these newer speculators to this sector use your website for due diligence purposes?
First of all, Bill, thank you for the introduction and thanks for the opportunity to be on your platform. I love what you're doing, and congrats on the 5-year anniversary upcoming for Mining Stock Education. CEO.ca was an idea I had probably about 10 or 11 years ago. I had a background doing web design, and I wanted to create a site for the stock market. There were a few small websites in Vancouver that were servicing this sort of Canadian venture market and the junior mining stock market space, and I kind of thought I could compete. I wasn't really sure how to pull it together, but over time, it's just kind of evolved from interviews with CEOs to, like you said, aggregating data around the Canadian market. And we subscribe to live feeds from the Canadian stock exchanges. We subscribe to the insider trading feed. So all trades by Canadian insiders are posted within the hour to the company channels on ceo.ca. The site is really based around Canadian listed stocks. So for every stock, there's a channel on ceo.ca, and you can access them at ceo.ca/symbol, whatever the symbol is. So what's the Goldterra symbol that you were mentioning earlier?
YGT in Toronto.
So that would be ceo.ca/YGT. Interesting that you mentioned Gerald Peniton. He is a dynamic guy that I interviewed some years ago, and I didn't know that was what he was doing now, so I'll definitely check that out. But essentially, ceo.ca is an aggregation of news, insider trades, stock market data, and community sentiment, what people are saying about specific stocks. And so it's just a free place where you can access as much public information as is available. And it's a watch list service. So if you know, for me, I subscribe to the channels of dozens of stocks, and you can organize groups of stocks in a watch list. And if you wish to do so, pay for live market data. And it's a fun mobile site. We think we have the best web product, the mobile product of stock market sites in Canada. So we're trying to make a fun and useful tool for Canadian speculators and investors, and people around the world are using the site with our markets focused to mining shares. It's been a very exciting 2020, and we're building services and tools for the benefit of the Canadian retail investors worldwide. So I'd encourage your users to check it out. ceo.ca is free for the delayed 15-minute delay quotes version, and plans with live data from $50 a month Canadian. So a lot to check out. There's a lot going on the site, and we try to just be fun, fast, and useful. It's a good place to subscribe to news feeds and just monitor a bit of what's going on the shares you own or the shares you're watching. I built it basically for myself. I live on the site to keep track of the the little companies that we're owning that are hopefully going to become big companies. There's a metaphor, I heard years ago that when a junior mining, anything a junior mining company does is news and can change the outlook for that stock. And so it is important, if you are in this space, I think, to closely monitor the shares you own. So co.ca helps you do that.
If a newer investor is going there after they listen to our interview, and they don't, of course, have your network and your connections and see your deal flow that you see, and they're saying to myself, I want to find some good investment possibilities. How should they go about that using your site?
The first thing I would say would just, find good speculative opportunities. Investment to me is, long-term conservative investing. As you probably know, mining shares it's like a boom bust sector and high risk, high reward opportunity. So I just wanted to preface that the stocks that are on, in our market and popular on co.ca are highly speculative. But we've got a pretty cool tool. If you go to co.ca and there's a button called Companies, that quickly shows you the trending stocks on our site. That's the ones that are most popular by users who are most trusted on our site. So that'll give you a really good overview of all of the stocks that are being closely followed by our users. And that Companies page has a phenomenal watch list filter where you can see by market cap, by companies that have volume anomalies or gainers or losers, those with news, stocks that are halted. Very quickly at a glance, you can see what is happening with Canadian venture stocks, which are, like I said, predominantly the mining shares. There is a bit of a belief that I have as an investor that you want to buy the sector and the stock that's quiet and sell it when it's popular and noisy. So, I would say have some caution with the most popular stocks because ultimately, you want to buy the page 16 story that's going to page 1, not the page 1 story going to 16. Obviously, we're finding value in our market, I think, is often discovering things that are uncovered and waiting for results or other investors to catch on. So it's a great tool to see everything at a glance and a tool to help filter ideas and still. I would just encourage everybody to, the best education, the most context, the most information you can gather and the most time you can put in. That's really where the edge comes from. I don't think you can go to any website and see a list of stocks to buy. And that's just, it's too risky to do that. But with tools like co.ca, with podcasts like yours, and a bit of homework over time, I think you can get a really good edge in this dynamic market and make a lot of money. So yeah, thanks for the opportunity to talk about it, Bill.
And one of the things about co.ca versus some of the other sites is that it's so user-friendly. You can see an ongoing conversation. You can scroll up and down. You don't have to click 80 times to see 10 different people talking. So I really appreciate the user-friendliness of the chat rooms. And do you ever go in there to just kind of psychoanalyze the discussion just to gauge sentiment? Because like you said, you can see the chatter. Sometimes on a hot stock, it seems like it's just they're all reinforcing each other. It's one big echo chamber, but then you might have a naysayer in there, and then you can kind of see how the conversation changes after maybe the drill results disappointed. I mean, can you talk at all about how you psychoanalyze the conversations in these chat rooms?
Yeah, well, I think it's a very good point. I'm not going to lie to you, Bill. I think that there is widespread manipulation of social media commenting on penny stocks in Canada and other markets. I think it's also the case in U.S. stocks. But oftentimes when you see a stock that's run, it's usually quiet when the stock is low, and as a stock is rising, it becomes more popular. And usually the most enthusiasm and the most activity is typically at the high. And so I would be skeptical when everybody's enthusiastic. I just think skepticism is so critical in this arena and on co.ca. Like, we see users that come on that don't have a long posting history, that just reinforce bullish bias or bearish bias. And so, oftentimes I can't prove, but I am skeptical that the conversation taking place is always genuine. There are a number of users on our site who have a lot of experience and have earned reputations and have and add a ton of value on the site. And, you can find those guys on the community page of our site, just the most followed users like Goldfinger Stateside, Luke Ten Have. Somebody that you got to have on your podcast is Luke Ten Have. I think he's a Amsterdam or a Netherlands-based speculator that's just so good at finding opportunities as a retail investor without being in private placements necessarily or an insider in companies. But these guys that have a long-term public track record and share context about what they're doing, they are they are somebody that I pay more attention to. But whereas a user that's account is 1 or 2 days old and they're just posting Yahoo, Wahoo bullish comments, like I discount that stuff. I really think, like I said, you want to buy quiet and sell noise. And so, be cautious when everybody in your channel is optimistic, and maybe be optimistic when everyone's bearish. But it's just layers, right? It's like there's tons of different inputs that can go into how a share is going to perform. You have news flow, discovery information, commodity price moves, sentiment, money flows into the sector, promotion. So social media comments is just one thing, but it definitely pays to stick around and to get a sense of a network. You're building a great network on this podcast, but like for me, the best thing that's happened to me is having a network of people that I trust that I can bounce ideas off. I was trying to do due diligence on a company that's exploring in Honduras recently, and I'd never heard of a junior in Honduras. And I made 6 phone calls on it, and turned out one of those calls, the guy I was talking to had actually been to that property and knew everything from the topography to mineralization history, so forth. So this is a really small market. The mining scene is a small space, and I think there are just a few thousand people that are vital to global exploration and development. And if you come on sites like CEO.ca and listen to your podcast and go to conferences and build a Rolodex, like that can be your network, and you can synthesize ideas and insights and make better informed speculations.
That's excellent advice. And Tommy, years ago, I listened to a Rick Rule interview, and which kind of inspired me along the education thing, educating myself to be successful in mining stock speculation. And Rick said that he constantly takes advantage of what he's termed a knowledge arbitrage in this sector. And he said he's been successful not only because of his own ambition, but because the caliber of the competition is so low. Could you address market inefficiencies in the junior gold sector and the junior resource sector, and what should newer investors know, and how have you taken advantage of this to your own success?
Well, that's a big question. I first of all love Rick Rule, love his interviews, and especially on your site, he's so loquacious, and he packs a punch. In 1 hour interview with Rick, it's like there's the wisdom of 4 or 5 or 10 interviews with anybody else, seems like, in the space. Now, what can I say? It's a sector that, like for me, for example, I came in the market in 2010. I had, I've told this before, but my parents, they discouraged me from getting involved with mining and stock promotions in Vancouver growing up. They, so I didn't really look at it, but I got pulled in by a bull market. And I think that it's important to know that, when a new guy is interested in the space, like for me, when I was interested in the mining space in late 2010, that was the top, right? When I'm a web designer getting pulled into this mining space, it was because everyone around me was making money, because, it was like a magnet seeing these neighbors and these people, and at the restaurants in Vancouver, we're all having, fancy champagne lunches. And I was like, I gotta get in on some of this, but I came in at the top, right? And fortunately, I had some youth and discipline, and I was like, I'm going to stick around to ride this down and then back up, because I kind of realized that. But so typically, when the market is hot, you've got new investors that don't have a ton of experience, that are attracted to the space, and so these people, just by default, they're not doing the same level of due diligence as somebody like Rick or somebody like me who's sticking around. And so I think on one hand, just be skeptical if you're new coming to the space. That's it's a reason for pause. Like, why are you there? If everybody else has an information advantage on you, how can you tilt that more into your favor? And so some of the just basic questions that need to be answered are, what is the price paid for the shares in the stock that you're looking at, right? And if you can't answer that question, I don't think you should be investing in it in the first place. So, you can go to CDAR, which is Canada's public company reporting site, and find out for on the company profiles of each sort of Canadian junior miner. You can find in the management's discussion and analysis and the annual information forms and the management information circulars, information such as the financing history, how many shares were sold at what prices, and if you're looking at a stock that's trading at $2 and the average share was sold at 25 cents or less in recent history, well, that's a red flag to some extent, unless there's just some incredible discovery news. But oftentimes, financing takes place, put some money into a company, and the stock price runs because the financing activity, it funds a new drill program, it draws a ton of attention onto that stock, and there may not be a lot of supply in that stock. The share prices, they reflect supply and demand on the shares in the public market. And when a private placement financing takes place, when investors are putting money directly into a company to fund exploration, typically that stock is escrowed or held, restricted for 4 months to 6 months. 4 months for Canadians. I think you could tell me, Bill, but 6 months is common, I think, in the U.S.
Yeah, but as a U.S. investor in Canadian private placements, it's 4 months plus. Right now, for me, it's many months to get the legend off. I'm at a big disadvantage.
Yeah, I know you are. Well, we welcome you up here, Bill. You moved here, but 4 months. 4 months after that financing takes place, that whole supply of shares becomes free trading on one day, right? And so say some legendary investor puts in $5 million at 25 cents into a stock, and there's not a lot of supply available in that stock and a lot of hype around this new investor coming in, and all of a sudden the shares are $1.50, right? That happens all the time. Well, 4 months later, you're going to get a much more healthy market based on the additional supply that comes to the table, and that might be very bearish to the stock price in the short term. So knowing what the shares were sold at and what prices, I think, do you want to be the guy who pays 10 times what the last guy is to get in? If you are doing that, why, right? What is the news that is so uncovered and transformational that you should be paying? You should be getting 1/10 of the shares for your money as the guy 2 months ago. And that's just an inefficiency of enthusiasm coming into the space. I've said this quote many times, but the mining market, junior mining market, is like, when it's hot, it's like pouring a bottle of whiskey into a shot glass. There's money that flows all over the table. The whole bottle gets spills everywhere, and that means money comes and stocks rise everywhere because it's such a small sector. And it can be extremely profitable, even in the lowest quality of stories. But over time, that sort of dries up. And yeah, it is a space that's like, I made the joke today that the junior mining market is like Vancouver weather. It's 80% shit and 20% spectacular. And if your strategy is just to buy it when it's hated and sell it when it's sunny, you're going to make a fortune. Like I have been blessed with it this year. I'm sure you have, to have been positioned in junior mining stocks last year, right? I was on podcast last fall, and almost every stock that we were talking about has risen 500 to 1,000% on not much material change. And that's the function of the market going from unloved to loved. And so on a 5-year span, there's going to be 3.5, 4 years where it sucks, and 1.5 years maybe when it's good. And that's a total vague, not predictable comment. But the 10 years I've been around the market, it's like it's good 20, 30% of the time. And right now it's pretty good. There's been a ton of money raised in the sector, and I think the biggest risk to the junior market right now is just the massive amount of money that's come into private placements that's going to become free trading in the next weeks and days and months, that provides a new level of supply that may not be met by demand, right? And so I've got a friend who's done an incredible job of building his company from 3 cents to $1.40 in a year. And he's not a pump and dumper. He's got his shares and holding for the discovery and the hopeful development of a real economic ore body that he could sell to a major. But he's got this situation where He raised $5 million at 20 cents. Now the stock's $1.30. And that $5 million is worth, I don't know, call it 30 mil, right? So do the investors that he's raised money from, are they going to want to take the 6X in 4 months? Well, likely some of them will. That's a pretty phenomenal return. So that's new supply that he has to, prepare, get buyers for. And so, yeah, I think it's a big risk to juniors. The amount of money that was raised at prices lower than market prices could depress the market temporarily while this stock is digested. And then you also have this, there's this gold price uncertainty right now. Gold has had a major run, but I think is volatile right now, kind of trying to price in what's happening with COVID-19 and the U.S. election. And so it just sort of seems like it's going to be choppy right now. I don't know what to expect, under a Biden administration versus a Trump administration. What will investor expectations look like? It should be really good times for the market because gold price is high. That means major miners are making money. Money is coming to juniors. That means they're going to be making discoveries. But it seems like it's choppy right now. I think there's going to be a lot of shares that underperform and a select few that have discoveries that perform for us. So,
Tommy, you do an excellent job on the production side yourself. You produced a video that was extremely inspirational to many and did really well on YouTube about a gentleman who took I remember about $20,000, I believe, and turned it into about 17 million through speculating.
I think he's got even more than that now, Bill.
Is it okay? But I remember though he wrote it up and then he wrote it back down. And at the time the video was published, maybe 5 years ago, he was planning on doing it again. I guess my question after watching that, it's inspirational on the one hand, but it's also like, what were you doing at the top? Because you wrote it back down. How do you make a million or make millions in a bull market and keep it and not give it all back?
It's a great $1 million question. How to make it? If you're a retail investor and you are just buying stock in the public market, you have to take a lot of risk. You want to buy something when the market's quiet. It's a real story that hasn't been discovered by the rest of the market, and you need to have a conviction to hold it, right? It's very hard to hold a stock that goes up 30 times. I had a few stories this year where I had a big position in a deal that has gone from 5 cents to multiple dollars. Well, I was way too aggressive selling it early because I was up 8x and I need to feed the family here, right? Well, if I just held, it would have been almost life-changing. So getting into the right deals is one thing. Getting into them when they're not popular, when the sector's out of favor. Holding, that's where the massive returns can come from. On the flip side, holding is where, the round trip can come from too. So I don't really beat myself up over taking a profit early. I have this personal experience of, having a few 100,000 shares in Great Bear Resources at 15 cents that I sold at 50 cents and is now $19, right? It would have been amazing to hold that deal. I needed the money, right? And I'm one of these chicken speculators that if I make a good return, I reevaluate how much, so for me, I'm a disciplined seller, but Rob Hirschberg is the guy we're talking about that, he had 100 grand into $1 million, then back down to 100 grand, then 100 grand into 10 million, and then back down to 100 grand, then up to 20 million and back down. And I think, I think his $20 million went down to 3 or 4 million in the bear market of sort of 2011, 12, but he's made it back and some. He killed it in 2016. We interviewed him in 2015, but he just, he goes all in. He promotes the hell of the stuff he's buying. He gets, he's infectious about the stories. He's like, he's almost an enigma. Like his hairdresser and him talk about penny stocks, and he's just Mr. Enthusiasm for the sector and promoting his book and taking big risks in private placements and getting some sweetened deals because he's in privately. Now, Rob is the kind of guy that, and he admitted this in his podcast, he has a hard time getting out, right? Because he's a believer. And this happens, you see, there's a huge class of people that make a fortune and don't sell. And, it often happens to people who work in the companies and they're restricted from selling or their ethics prevent them from doing so. But some guys just become believers that they don't sell. I've got a really good buddy actually that's made probably $75 million at one point on paper, but very poor seller has written it down to a measly $20 million. He's still very, very successful, but yeah, I'm not like that. I'm a cynic. Unfortunately, I have my dad is a pessimistic investor. He's a bear on everything. He's second guessing everything, and he kind of beat it into my head. So I'm always sort of saying, how much of this stock would I buy today? If I've got a big win, say, I put in 20,000 and it's 200, do I let it ride, or do I say, well, I would probably still be comfortable holding 20,000 of this. That was the original investment size I made. So because I have that cynicism, I sell early oftentimes, but I'm holding on to the majority of the money I made in the space, and I've had a really fortunate trajectory where made pretty good money for a young person in this space, but I'm still making bets the same size that I used to when I didn't really have much. I'm a conservative speculator, and when I have a big profit, I take it out. I buy real estate or index funds or diversify to some extent into other investments. And I'm keeping my speculative money that I use to try to make a big wins in this junior resource sector. That's a small amount of capital. Like I was told by a guy that's exceptionally wealthy once, he's like, if you're gambling with more than $1 million in the junior space, you're doing it wrong, right? And now Eric Sprott is obviously the complete opposite of that. He's a multi-billionaire that's got hundreds of millions of dollars funding the space, and his approach is phenomenal. He's a believer that holds his positions, has made close to $1 billion on one trade on Kirkland Lake, and he's the guy that holds and doesn't sell, and he's got 1,000 times more money than I do. But there's a lot of different approaches that make it in this space. The more your odds of being wealthy in the junior mining market are rising dramatically if you have a 5-year plus horizon where you're going to stick around, learn the business inside and out, and develop this contextual knowledge of what's going on around you in a network. And then your odds rise even more dramatically if you decide to make a career in this space, which I have done kind of backwards through the website, and it forces me to stay in through the good and the bad times, and have the relationships to take advantage of the good times. So
you just gave a lot of good advice there, Tommy. And as you were talking about real estate, I recalled how Warren Irwin, the fund manager, told me once that, and I believe this was in a published interview, that when he's feeling too smart or too good about himself in his mining stock investing, that's the time to take money out of the sector and put it into real estate. That's his action plan.
Well, I love Warren. I have such low self-confidence that I'm always trying to be more conservative and more. I'm a scaredy cat. I'm scared of not having safety, and so I think that might prevent me from making Eric Sprott's kind of wealth, but at the same time, I sleep pretty good at night.
And Tommy, before you go, as we kind of conclude here, is there any firsthand vibe you're getting from House Street there in Vancouver that you could share with us? And what would be the takeaway of that for the average retail investor listening to us?
Well, so House Street is like Vancouver's Wall Street, and it's a metaphor for the junior mining market in Vancouver. There are 1,000+ companies located in around House Street, which is just a street in downtown Vancouver. My sense is that this is kind of high times at the moment. Like if you haven't had a good 6 months since April, it's really been phenomenal for our sector. And so if you, I think the mood here is quite good. People have made profits in their deals and their friends' deals. They have raised money, so they have funds to pay themselves and to grow their companies. You're starting to see, which is kind of unfortunate, but when a CEO does something good, oftentimes their next few deals, the market will pay them more for. And so you're starting to see promoters of deals launch second, third, fourth, fifth companies because the market's hot and they can raise the money and create wealth for themselves. And so that greed is starting to come in here a bit, which is something to be wary of. Management focus is huge. And this is like a time-old story. A CEO does a great job, doesn't make as much wealth as he could, starts to get greedy, does a bunch of deals while the market's hot at terms that are more advantageous to him or her. and the market turns and investors are left wondering what the hell happened, And so there is a lot of there's a lot of greed around at the moment. There is a more of a fight to get projects and to get shell companies. It's definitely busier. It's not high times by any means like it was in 2007-8 from what I've heard, and it doesn't even seem like it's quite at the 2010-2011 euphoria. A lot of investors feel just because the market was so bad for so long that this rise in gold is legit and it's got legs, and the commodity prices drive this space more than anything. If gold makes a run to 2100, I don't see any issue with the supply of stock that I mentioned earlier in the interview. I think it'll get soaked up and some, and $3,000 gold. This little sector will have created so much wealth for insiders and retail investors alike. But there's a bit of caution, the enthusiasm that, people are worried a bit about the supply that's coming. But yeah, there's the easy low hanging fruit have been picked, and it's an interesting time. People are happy because it's business is taking place.
And Tommy, if listeners want to follow you, if they're not familiar with your work, would the best way to do that be to follow you on your own website, ceo.ca?
Yeah, I'm ceo.ca/@Tommy, and I'm also on Twitter, Tommy Hump. I don't post as much on Twitter anymore as I used to, just sort of focus my energy on ceo.ca. But I'd love to meet any of your listeners, and you can message me on my profile or send me a private chat. And just great to be on your platform, Ben, connect with you, Bill, and thank you for what you're doing, educating people about mining shares, and congrats to the success you're having and the great sponsors you're attracting, and just good to be here with you.
Excellent. Thank you, Tommy, also. And like I said at the outset, please go to ceo.ca. If you're newer to this sector, make sure you include visiting this website as part of your due diligence for researching these companies that you're investing in. All the best to you.